I made it clear to President Putin that we'll continue to raise issues of fundamental human rights, because that's what we are.
Liftoff is well into the future. The conditions for liftoff we're very far from maximum employment, for example.
And I'm so very pleased that now we have the G7 coming up with support for about $100 billion redirected from countries with strong reserve positions to countries that need help.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 17th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Federal Reserve shocks markets by moving forward its rate hike forecast. It now sees 2 increases by the end of 2023. The dollar jumps. ECB chief economist Philip Lane plays down expectations for taper talk at September's meeting, saying it's too early to discuss an end to PEP. More from our exclusive interview. And Joe Biden and Vladimir Putin agreed to work on arms control after their meeting in Geneva, but differences and tensions remain over human rights and the recent spate of cyber attacks. So good morning, everyone. Of course, this is our top story. Jay Powell and his colleagues at the Federal Reserve surprised markets at yesterday's meeting. Now, the U.S. central bank held policy steady as expected, but moved forward its rate hike forecast, predicting 2 increases by the end of 2023 as the economy recovers. Now, Powell also raised the possibility that the transitory inflation that the U.S. is experiencing may actually last a little bit longer than he'd previously expected. Well, here's how Bloomberg TV guests reacted to the announcement.
The earliest we're going to get an announcement is probably September on tapering. And then based on history, we shouldn't expect any real action until we get into the late first quarter or to the this early second quarter of next year. And then it'll probably take them about a year to taper.
Inflation and the flare in inflation has come in much stronger than they thought. And I disagree a little bit with Scott, although I love Scott. And, I think, I call it artful dodger when Jay gets up there and talks about, in terms of not committing to quantitative easing and what are they going to do with QE in terms of the tapering.
Well, I think the risk is that they're going to be too slow because they basically said that they're not even going to start to tighten monetary policy until there's 3 conditions met: 2% inflation, they're at full employment, and they're confident inflation is going to move above 2%.
The next meetings, it is all about this shift in the market now having to digest that this is a Fed that is no longer willing to look past, tremendous, substantial further progress and being forced to recognize that substantial further progress. And then the market being forced to recognize, what does this mean in terms of no longer having this ever-flowing amount of liquidity?
Now let's bring in our Danny Berger with the very latest. Danny, what does this mean for the markets? I know there was a big move in dollar.
Yeah, huge move in dollar, huge move in the belly of the curve yesterday. Look, we knew going into this that it could be the hawkish surprise that really weighed on markets. That's where the risks were leaning to, and that's what we got. 5-year, of course, not surprising, it was one of the most significant moves, given it's the most sensitive to rate changes in the Fed. And this really does seem like a big attitude shift that they're now focusing on this huge growth coming out of the U.S. So we saw more than 10 basis point move out of the 5-year yesterday. Today, things certainly look more subdued, despite the fact that global bonds also moving in sympathy with what we saw from U.S. yields yesterday. However, today, U.S. yields, dare I say, moving even a little bit lower, but just a basis point, so not major moves here, Francine. Some more digestion, perhaps even some concern that perhaps there could be a policy error here, so not too much movement. Bets on inflation also holding steady as well. But as you say, the real big winner coming out of this and continuing its strength today is the dollar. You can see the euro dollar continues to hold below 1.2. Of course, Philip Lane's words this morning to us saying that September policy meeting, downplaying the importance of it, also weighing on the euro. So Fed Chair Jerome Powell really clearing the way for dollar bulls to absolutely take off late yesterday and this morning, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the move swings on the back of the Fed. We're also getting some breaking news out of the Norges Bank. So the Norway Central Bank actually saying that rates will most likely be raised in September. So that's, again, something else that just adds to the fact that we could see more hawkish central banks across various parts of the world. Now, later this morning, we'll also be speaking to the Norges Bank governor. He's Øystein Olsen. That's at 11:30 a.m. this morning, London time. So it'll be interesting to get more on his take of what he said just minutes ago, saying rates will most likely be raised in September. Meanwhile, the ECB chief economist Philip Lane this morning also played down the central bank's chances of talking about tapering in its September meeting. Now, he spoke with our European central banking editors. He is Paul Gordon about the outlook for the pandemic emergency purchase program.
The decision we made in March to step up remains a good decision. It remains the best guidance. But with PEP, we also have a very strong philosophical design to PEP, which is we're not mechanical in the sense of saying we will do X amount and no more and no less. So the seasonality about the summer, historically, when you say the alternative way of doing QE, say we're going to buy X billion. And then the seasonality factor is easy because you just rearrange. You know August is coming. August comes every year. It's not a surprise. And you rearranged your fixed schedule more in other months, less in August. We don't have a fixed volume approach to PEP. And this is why the issue about the summer liquidity is secondary. Because we want to observe, and we have the day-by-day flexibility, is that there could be investor shocks over the summer in either direction, positive or negative. And so we very philosophically are determined not to kind of express monetary policy as an exact ex-ante volume, but to say we will buy purposely in response to market conditions.
That was the ECB chief economist Philip Lane speaking to our Paul Gordon. Now joining us is Patrick Audier. He's Lambert Audier, senior managing partner, of course, one of the most important banks in Switzerland. So we'll talk to Patrick about the markets, the Fed, and some of the concerns out there in Switzerland. Patrick, thank you so much, as always, for joining us right here on Bloomberg Surveillance Early Edition. First of all, just give me a sense of how you expect the next 12 months to pan out. When you look at markets, when you look at what we heard from the Fed, is there going to be a lot less volatility? And what does it mean for what kind of advice your clients want?
Well, good morning, Francine. It's great to be with you. Yes, we do look at the market in a constructive way, indeed, even though there may be sometimes some surprises. The Fed announcement should not lead to any change in the preset policy of the Fed, I guess. The global economy is in I would say in a sweet spot between the aftermath of the COVID crisis and perhaps the first results of the recovery. But progress is underway, and that would definitely lead to a gradual withdrawal of the stimulus policies. Now, this is not to say that there will not be wonderful opportunities to continue to invest, in particular on equities, and we're looking at those opportunities selectively, having, of course, benefited from the rotation between the equity sectors also, and looking at also perhaps some of the markets, such as the fixed income markets in emerging markets in local currencies as being good opportunities. But in general, constructive with expected, of course, reactions of the central banks, depending still on the safety with which they can take those measures, given the circumstances and the progress of the economy globally.
Patrick, when you speak to some of your clients, what are they asking at this kind of juncture in time?
I think the clients, actually, they fear not to be invested rather than to be too much invested. I think they want to take advantage of the positive risk premium on equities. They want to make sure that they can also take advantages of this sector rotation that I was alluding to. And they want also to take advantage of these, I would say, changes in the reallocation of the recovery plans towards the more sustainable economies and sectors. And I think in this respect, we're very well positioned. And at Lombard Odier, we've been there for 25 years to advise our clients in these sectors.
If you look at some of what the private equity companies are doing, some of what the market's expectation is compared to what the central bank has been saying, is there anything that seems mismatched, or where's the biggest dislocation going to come from?
No, I think I don't think there's huge mismatch. I think we have to be careful about this shift in the situation on the interest rate, and I think this should probably call for some prudence for the fixed income portfolio interested investors, where there, of course, there are specific risks that have to be carefully managed. But in general, still, I expect that the biggest risk is to make sure that is not to be invested, rather than to be invested. There's overspending in the world rather than over-indebtedness, and I think in this respect, there's ample way to go into further growth of the markets.
In general, Patrick, what does this mean for banking and private banks? So, given where we are in this quite mature market, are you expecting some kind of consolidation to continue in Europe, or maybe even in Switzerland first?
Well, I think there will be consolidation, but probably a little less pressure now than if the rates go up. It will also allow for the financial sector to take more advantage of it. Actually, the financial sector has been in many countries, in particular in Switzerland, at the origin of some of the solutions to the COVID crisis. The banking sector has done correctly, and if not well, during that crisis by doing its job, that is irrigating the economy and also saving and making sure that savings were well protected and guided. That's at least what we're trying to do. So I will see, of course, more consolidation coming in, but not as a shock, much more in an orderly manner as it has been in the past. So no big change in this respect.
Patrick, what about some of the changes that actually the pandemic will bring on, I guess, the economies? Are we going to be able to retrace the suspension of this economy for the last 14 months to go back to the level that we should have been had we not had the pandemic?
Yes, I think we will. The last bit of recovery, of course, takes much longer than the first 90%, and you've seen that already for a few months. I think where it's also interesting is to see that you see now some of the sectors that were the most heaviest hit by the crisis get back on track. That means that there's also some pressure on some prices, and it will have some impact. But I don't think long term this will necessarily be the initiation of a new major trend on inflation.
All right, Patrick, thank you so much. Patrick Audier there of Lombard Odier stays with us. We'll talk also about the trend towards ESG, and we'll, of course, talk about Geneva after President Biden and President Putin met yesterday. Now, smart conversations on surveillance, early edition. Today, we also speak to the chief executive of one of the world's largest cryptocurrencies exchanges. Jesse Powell of Kraken joins us later in the program. And then, as the British Chamber of Commerce calls on the government to extend its furlough scheme, we speak to the new Director General of one of Britain's leading business organizations, Siobhan Haviland. If you have any questions for any of our guests, just IB plus TV Go. This is Bloomberg.
What I'm saying is, I think there's a genuine prospect to significantly improve the relations between our two countries without us giving up a single solitary thing based on principle and our values.
Well, that was U.S. President Biden reacting after his meeting with President Putin in Geneva yesterday. Now, the first between the two leaders since Biden took office. Tensions between the two countries have been high for years, with both sides accusing the other of meddling and human rights abuses. Now, both claimed victories from the summit and set the stage for gradually improving relations. I have to say, I covered the summit in Helsinki back in 2018 between President Trump and, of course, President Putin, and it was a different feel, and they also at the time did a joint press conference. Yesterday they split it. Now, Patrick Audier of Lombard Odier is still with us. Lombard Odier, of course, one of Switzerland's largest and oldest private banks, and has been continuously operating for more than 220 years. As of the beginning of this year, it manages some 316 billion Swiss francs of client money as well. So, Patrick, I don't know whether, yesterday, I guess, being based in Switzerland, you actually saw it as a comeback for Geneva, as a kind of neutral ground where world leaders can meet and get down to business.
Yes, Geneva was very happy to welcome this summit. I think this summit was a perfect opportunity also to broadcast positive news in the spirit, i.e. a gathering, a dialogue versus an opposition. And that's really what we could take away from this meeting. Basically a handshake rather than a sort of a no-go, a willingness to cooperate where we can, and a willingness to also dialogue where there still are some issues of differences. And I think this corresponds to the spirit of Geneva, and it was a positive news for all of us.
Patrick, it seems that we had quite a lot of foreign policy news over the last 4 to 5 days between NATO and, of course, the G7. None of it is really filtering through the markets. So is this bifurcation normal because it's a timeline issue that the market is more short term and this is longer term? Or do you see it just not impacting the way people work and live in the future?
The markets have to do with a sense of trust, of confidence of what's going on. And of course, the markets don't like uncertainties unless correctly utilized short term. So in the longer term, for investors such as we are at Lombardier, we're really seeing this evolution as positive. That's why we have and continue to have a constructive view on the markets. We believe that the fact that the G7 is also getting to agreement in areas such as global fiscality is an important step towards cooperation, towards multilateralism. And I think in this respect, avoiding tax wars or other types of commercial wars is always positive to the market. So we do see indeed a return to a more normalized situation in nearly all respects.
So what do you see the relationship between the US and Russia and US and China ending up? And what does that mean for Europe and Switzerland?
Well, there's a harder front between China and the US that has to be dealt with on issues that are well known. We all understand the technology challenges and mastering of the world as well. We understand also that China is becoming a world power with effective influence on many of the ways we do manage our economies in general. We don't want trade to be stopped in any sense, or perhaps trade to go down in any sense if we can. So I think every effort will be concentrating for the benefit of all towards those priorities. And the fact that there may be still some difference of opinion between Russia and the US with this new administration, including perhaps what has been said yesterday, should be a matter of stabilizing rather than destabilizing the overall situation.
Patrick, we also talk a lot about sustainability, of course, and there's a greater appetite from investors to invest in products and invest in companies that are more sustainable. What does that actually mean for a company like Lombardier?
Well, for us, it's a matter of investment conviction. We see these changes of paradigm as affecting us all. I mean, the world economic systems have come to limits. We have to recognize it. The science-based framework tells us where are those limits, which one has been crossed over already, and how we can come back. So we have to set targets, and the financial sector has and can bring its contribution as an accelerator to this transition. We at Lombardier have taken that turn for 25 years already. We are advising our clients to look at the sustainable sectors and investment philosophies as the single most important sources of returns for the future, and also reduction of risks. So it is not only from a fiduciary point of view, a necessary step and changes, of course, that the financial sector will have to make for those who have not yet done it, but it also a fascinating world in which the opportunities are extremely numerous and interesting to analyze. So it's a fascinating world for the financial sector.
Patrick, where do you see now the next steps? So where do you see the new opportunities? I don't know whether it's battery storage or some of the technology around that, or what we've had so far will just increase threefold or fourfold.
Well, the big challenge that we all will have to go through is the decarbonization of our industries, and that affects practically every industry. So the question is, how do you do it from a financial point of view? And does that mean that you're going to change course in terms of selecting sector? No, it means that you're going to have to analyze which are the sectors that are going to be aligned with the objectives that have been set, for instance, at the Paris conference, and compared to those sectors, which are the companies within those sectors that at best can contribute to that transition and will contribute. If they don't do it now, how can you engage with these companies rather than simply exclude them, which would have lots of collateral damages? How can you engage with these companies to make sure that they get aligned to those objectives? And that's the role of the financial sector, and that will probably offer opportunities in the health sector, of course in the technology sector, but also in construction, mobility, in practically every sector in the world.
Patrick, thanks so much. Patrick Audier there, Lombard Odier, Senior Managing Partner, joining us this morning. Now, smart conversations on Surveillance Early Edition continue. Today, we also speak to the Chief Executive of one of the world's largest cryptocurrencies exchanges. Well, Jesse Powell of Kraken and Siobhan Haviland of the BCC join us later in the program. If you have any questions for either of them, both of them, please just IB plus TV Go on the Bloomberg terminal. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. The dollar index, so the dollar was climbing on the back of what we heard from the Fed. Again, the dollar strengthening as nervousness about U.S. interest rate hikes spread through global markets. We'll have plenty more on that shortly. We also discuss crypto. This is Bloomberg. Well, the Federal Reserve shocks markets by moving forward its rate hike forecast and now sees 2 increases by the end of 2023. The dollar jumps. Joe Biden and Vladimir Putin agreed to work on arms control after their meeting in Geneva, but differences and tensions remain over human rights and the recent spate of cyber attacks. And coming up, we speak to the new Director General of the British Chamber of Commerce, Siobhan Haviland. Up next, though, we speak to the Chief Executive of one of the world's biggest crypto exchanges. That's Jesse Powell of Kraken, and I'm really looking forward to that interview. Well, good morning, everyone, and welcome back to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So there is quite a lot going on. Let's kick it off with Russia-U.S. tensions that could be the beginning to cool after U.S. President Biden and Russian President Putin met for the first time since Biden took office. Animosity between the two countries has been high for years, with both sides accusing the other of meddling and human rights abuses. Biden now says there's a chance for real progress for the relationship.
I made it clear to President Putin that we'll continue to raise issues of fundamental human rights, because that's what we are. That's who we are.
With regard to return of ambassadors to their workplaces, return of American ambassador to Moscow and our ambassador to Washington, we agreed that they would return to their service.
What I'm saying is I think there's a genuine prospect to significantly improve the relations between our two countries without us giving up a single solitary thing based on principle and our values.
Let's get to Youssef Gameldin on the ground in Geneva for us. So, Youssef, we all watched the press conferences. We all, tried to look at body languages. But I think the most, interesting thing was a throwaway comment from President Biden saying, he's not sure the Russian president will change.
Yeah, I mean, there's a lot to get through, and sometimes it's conflicting indications as well. I mean, the meeting was not even 3 hours long. Going into this, the thinking was it might last 4 to 5 hours, but Biden made it clear that they covered everything they needed to cover, and now it was up to the expanded teams and some of the support staff to do what they need to do to maybe set up another meeting in the future. For the Russian side, this has always been about constructive ambiguity. They didn't really agree with some of the U.S. points around human rights and around cyberspace, but those are points that Biden made very clear that he felt strongly about. But what they could agree on was to reinstate ambassadors, and this is something we talked about quite a bit in the run-up, so that lived up to a relatively low bar going into this meeting, and that's going to help restore diplomatic ties and just get the conversation going. Important quote that struck me: a genuine prospect to significantly improve the relationship. No reset, but an important step forward. Francine?
Yusuf, thank you so much. Yusuf Gama Eldin there, live for us in Geneva, of course, on the Biden-Putin summit. Now, let's talk about crypto. This is an interview that we all wanted to do today. Our next guest is Jesse Powell. He is the chief executive of the digital currency exchange Kraken. Now, in terms of trading volume, Kraken is Europe's largest and is the world's fourth largest. Outside the U.S., Kraken is popular because of its margin and futures trading offerings. Earlier this month in the U.S., the company launched its mobile app also to capitalize on retail investors flocking to crypto. Jesse Powell, Kraken chief executive and founder and co-founder, welcome to Bloomberg. And thank you so much for joining us. It's always, great to be part of, some of your journey where you try and understand what crypto will become and what Bitcoin will become. I think last time we spoke, Jesse, it was a pretty volatile day, even for a lot of the cryptocurrencies. We had a sell-off in May. What are some of your clients now asking? Are they trading differently? Are they looking at things a little bit differently?
Yeah, what we're seeing is the people who are selling at these levels are people who have actually acquired these assets in the last year or so. So it's people that are swing traders or new to the market. We see the guys that have been holding for a long time, just continuing to accumulate. And, you see guys like Michael Saylor just sort of backing up the truck, ready to buy as many Bitcoins as he can at any price. So really, we think it's sort of the weak hands, that the people that don't really understand the fundamentals here that are selling the momentum. And, generally we're seeing way more people sign up this year than we have in any prior year. Actually, the first 2 months of the year blew away the numbers for the entirety of 2020. So we just see really here the beginning of mainstream adoption of crypto.
So, Jesse, you don't think there's less enthusiasm, right, for it? Or is there less enthusiasm? You're saying that there's less enthusiasm from people that don't quite understand it.
I think that's right. Yeah, people that just came in for the quick gains. I think those people are also quick to leave when the price starts slipping. But the people that have been here for the fundamental reasons, that understand the true long-term impact of cryptocurrency on the world, in DeFi and blockchain technology, those guys are here to stay. They're continuing to accumulate. And I think the people that are selling now, they'll be back when the price is coming up, or when they go to read a white paper and understand what's really going on.
Is there any diminished interest, Jesse, in some of the alternative coins?
I would say so, yeah. So trading has definitely slowed down. We certainly see much more trading when prices are increasing than when they're falling. People tend to sit out the market and wait to see what happens when the prices are coming down. So I would say that there's some less interest. However, there are new amazing coins emerging on a weekly basis that are sort of taking the best of everything out there and doing something new. And there are a lot of new bets to be made in the space. And I don't think the future of sort of which blockchains are going to be the winners in the future is certain at all.
So is it after the Elon Musk tweets where he said, Bitcoin is not green enough, he wants something greener, that you think something else could replace Bitcoin?
I don't see anything replacing Bitcoin at the moment. I think there could be greener alternatives. However, I think Bitcoin is a lot greener than people give it credit for. It is a way to capture a lot of discarded and lost energy. It's a way to bootstrap renewables. So I think it's doing a lot actually for the renewable energy sector. And, I don't know how long Elon has been studying this, but, I think he's got some more studying to do on this topic.
Jesse, one of the other things that I was trying to, and with the help actually of Lynn Thomason on our team, that was helping me look through, there was evidence of these forced liquidations, over-leveraged investors being wiped out in May, especially in the derivatives markets. Has that stabilized now?
In cryptocurrency, I mean, we haven't seen any major sort of wipeout scenarios in the last month and a half. So I would say things are relatively stable in cryptocurrency. I mean, we've pretty much been trading sideways in a narrow range for a while now. So no major market movements wiping anybody out lately.
I mean, there was a Basel committee about 2 weeks ago saying that, cryptocurrencies also threaten financial stability. Have you had conversations with them about Kraken? Do you think, Kraken is safe, or have they asked questions about financial stability?
We're talking to regulators all over the world all the time, and policymakers. It's a constant ongoing conversation. And our policy team is something that we're really heavily staffing up this year. So we want to be involved in more of those conversations and more of them earlier. There's just so much education to do. And, every few years, these politicians rotate out and you've got to start the process all over again. So I think there are a lot of misunderstandings in the space. I think that cryptocurrency over time is another major asset class like equities. It's something that will become less volatile over time. I don't see it as something that, puts nation states at risk.
Jesse, one of the other things, we're seeing movements, right, by big companies, even Goldman Sachs, I think, doing some offerings in the crypto space, so looking, for example, at some of the Ether options. Is that a challenge for Kraken? Does it bring actually cryptocurrencies in the mainstream? So is that a good thing, or do you see it as a rival?
I think it's a good thing. The pie is still growing. There's still very few people involved in cryptocurrency these days. I think a study back in 2018 found that about 100 million people were holding cryptocurrency. I think if we did it again today, we would see many multiples of that, but there's still so much room to grow. Goldman Sachs getting into Bitcoin or getting into Ether, that's just the tip of the iceberg. Kraken trades 60 plus assets with many more on the way. So it's still very early days. I think that a Goldman Sachs or any mega bank getting into cryptocurrency is just growing the size of the pie. It's bringing more people in. There are certain institutional clients who will only trade cryptocurrency through Goldman Sachs, because that's just who they trust. So we don't really see them as a competitor. Ultimately, Kraken owns a full stack exchange service. A lot of that order flow eventually comes through us. It's unlikely Goldman's going to stand up a full exchange to trade cryptocurrency. So likely they'll be routing orders through the existing exchanges, which ultimately comes through us.
Jesse, I know, you're so bullish, of course, on this, and you say this will also displace a lot of the fiat currencies. What kind of level could we see in terms of price for Bitcoin, and in what kind of timeline?
Yeah, I'm asked about this all the time. I think it depends on how many more US dollars are going to be printed. And it looks like there's no end in sight to that. So, it's really hard to price things in dollars. We just don't know where the dollar is going to go, really. I'm super bullish on Bitcoin. I think $200,000 a coin by the end of the year is still within reach. I've said one Bitcoin, one Lambo by the end of the year. It may be a Lambo with a fewer options or a smaller engine at this point. But, I think we're still looking at very lofty price targets here. I think we'll see a new all-time high before the end of the year.
Yeah, I bet. Do you get that question like 3 times a day? How often do you get the question, when are you IPOing? And what kind of valuation are you looking at?
Yeah, so, recently we've been in the middle of a financing round, in the ballpark of $20 billion. But, so an IPO probably 12 to 18 months out from now. We'd hopefully be looking at something above that. Nothing is certain right now. We're on the path. We're doing all the prep work. But yeah, that's another thing that keeps coming. I think people are ready to see another cryptocurrency become a player and get better access to that, which people really don't have right now.
Jesse, do you have a valuation target before you IPO in 12 to 18 months?
No, it's not really our top concern. We're just sort of, on a mission to bring crypto to the world, and our valuation hopefully will be a reflection of our success in achieving that mission.
Jesse, thank you so much. Always great to catch up. Thank you for joining us on Bloomberg.
Thanks for having me again.
Jesse Powell there, Kraken Chief Executive and co-founder. Now, coming up, the UK reaches an agreement over Airbus and Boeing with the US just days after its brokers its first free trade agreement after leaving the EU. Now, we'll discuss the outlook next with Siobhan Haviland, British Chamber of Commerce Director General. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK and the US have reached an agreement to end the dispute over Boeing and Airbus. The pact comes after the EU brokered a similar deal, but Washington also needed a separate agreement with Britain after Brexit came into force. Now, this comes after the UK brokered its first free trade agreement since leaving the bloc with Australia this week, offering some positivity to the nation after it was forced to extend its COVID lockdown for an additional 4 weeks. But what does this all mean for business? Well, joining us now is Siobhan Haviland, British Chamber of Commerce Director General. The BCC is actually hosting its global annual conference this week. Siobhan, thank you so much for joining us. So what is the number one concern for a lot of your members? I imagine it's, not the economy being fully reopened, but with that, are there longer term implications for them?
Hi, good morning. Yes, of course, our members are still concerned about the roadmap and obviously the extension that we saw this week, and ensuring that the right business support is in place to get them, to the 19th of July. At the same time, we are really beginning to see positive glimmers of hope from our members. They feel quite positive about the future. At our conference today, we'll be talking about two things. So we'll be talking about what we'd like to see put in place by the government to help that, put that scaffolding in place for our members so they can rebuild out of the pandemic. But also we'll be talking about some of the big areas that we think are really important to nurture that growth. So global trade, skills, and the green economy.
Siobhan, what do they need from government? So because we're not fully reopened, unclear exactly what kind of path forward we'll see. Do we need more furlough schemes? Are they getting enough support from the government? Or is it the smaller companies that really, struggle because of the support available?
As we've seen the roadmap change and the dates changed, we think it's totally logical that we should also see the great business support the government has put in place extended with the roadmap. So we would like to see the extension of cash grants for businesses that are either still closed or working in very restricted ways, and the extension of the furlough scheme, which is due to taper off at the beginning of July, extended to the 19th of July. There are some other things that we'd like to see put in place before our businesses can open again on the 19th of July, both around social distancing review and workplace testing. Workplace testing, we want to see that remaining, as cases may continue to rise, that workplace testing remains low or no cost for our businesses.
Siobhan, 6 months on from Brexit, what's the kind of, how do you take stock of how UK businesses are coping with that?
They're still working their way through the change in rules. It's been a tough six months for them. We see about 50% of our members struggling to work out, how to put the new rules in place. But that's what we're here for. So, on a trade front, we have huge capacity across our 53 chambers across the country to give expert trade advice. We help our members with trade documentation, with customs declarations. And we also have a network of 73 international chambers around the world who can help our businesses, export more into those markets.
Siobhan, when you look at some of the trade agreements that we've seen with Australia, some of the things that we're also negotiating on the back of the G7, that was, of course, held here in the UK, how much time does that take to filter through your members? So how much, if you have a trade pact, by the time it's implemented, how much time does it take for your members to then benefit from it?
So we really welcome the trade deals that are being done by the UK. We think that's a good thing. Ideally, we would like to see a broader trade and investment strategy. So we really like the government to bring together all organisations, public, private sector, so we can build a real ongoing big picture strategy for our trade and investment. But in the meantime, any trade deals that we're doing are good things, and we as an organisation are here to help our members work through the detail of those once we have them.
Great. Thank you so much for joining us, Siobhan Haviland, there, British Chamber of Commerce Director General. Now, coming up, we get back to covering all the action at yesterday's Fed meeting. What are the implications of a stronger dollar for commodities and EM? That discussion with Market Live's Eddie van der Walt. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, joining us to talk about the markets after the Fed day that really took some parts of the markets by surprise is Eddie van der Walt. He's a Bloomberg MLive strategist. Eddie, I mean, we were all watching that press conference, and it was pretty clear that, I mean, dollar could move further after what we heard yesterday.
Yeah, I think so. And I think we've seen that on Markets Live, where the strategists are just all saying that, you know, there could be more upside for the dollar here. And if there is more upside for the dollar, that has knock-on implications for EM as a basket, for commodities as a basket. As much as I hate treating those things as a basket, I think there are, you know, implications for those two asset classes that is going to reverberate across the coming sessions.
Eddie, where do you see I mean, is there another part of the market actually where you see quite a lot of action that was unexpected? I know yield curves are moving, that's to be expected, but what are the further implications of what we heard yesterday?
Yeah, so we've had you know, the morning has been very busy on Markets Live because all of these asset classes are trying to find their equilibrium levels after that decision, and particularly with Lane then also coming in and you know, just keeping the dovish narrative at the ECB alive. So at the same time, you've got some downward pressure uniquely on the euro as you see the dollar rise. I think in the commodity space in particular, you know, there's a lot of factors playing out. We've got still OPEC expected at some point to start increasing production. At the same time, you've got copper, which should be resilient on the idea of you know, of just longer EV demand. But I think the one asset that I would be watching very closely here is gold. Gold had a good run in the second quarter. I think that's coming under a bit of pressure. We're back down at 1,800, and I think that those losses could be extended in the next few sessions.
Eddie, we also had a great interview of Philip Lane, of course, the chief economist of the European Central Bank. What did you make of, you know, how the ECB actually will try and position itself? Yeah, the ECB's traditionally a bit more dovish, and they've had reason to be so in you know, in history. The problem is that if they stay dovish too long, it can create that feedback loop that goes into their banks that just destabilizes the whole zone. So it's interesting that they remain dovish at this point. Nobody's really surprised, I think, by that. But I think the risk is that they remain dovish for too long. Eddie, thanks so much. Eddie van der Walt there, Bloomberg MLive strategist, as always, with great insight on what we should be watching out for the rest of the day, especially important on the back of a Fed decision day. Now, Bloomberg Surveillance continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz will be out of New York. Now, the focus will be firmly on the markets after what we heard from Jay Powell yesterday. A couple of other stories, of course. We'll try and look at the implications of the U.S.-Biden meeting in Geneva, what it means for our foreign policy. And then I'm also looking, of course, at you know, some of the risks of inflation that Jay Powell's acknowledging, saying that officials had begun a discussion about scaling back bond purchases. We're trying to figure out the ripple effects for other central banks around the world. So we're looking at to all parts. I mean, it definitely marked a turning point in the Fed's communication to global markets, which had so far been ultra dovish. So more on that shortly. This is Bloomberg.
The earliest we're going to get an announcement is probably September on tapering. And then based on history, we shouldn't expect any real action until we get into the late first quarter or to the this early second quarter of next year.
I think it's really important that the Fed is responding to exactly what it said it would, and that is the data as it comes in. Inflation and the flare in inflation has come in much stronger than they thought.
I think the risk is that they're going to be too slow because they basically said that they're not even going to start to tighten monetary policy until there's three conditions.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, 5 p.m. in Hong Kong on this Thursday, June 17th. Our top stories today. Rattling their sabers, Fed policymakers surprise financial markets by signaling they expect to raise interest rates twice in 2023. The European Central Bank may stay the course. In an exclusive interview with the ECB chief economist Philip Lane, he tells us why the bank may not start tightening until up in September. And drug makers will take a dive. Shares of CureVac lose more than half their value after disappointing results in a study of its COVID vaccine. So we have quite a lot to get through today. A lot of the focus on the central banks. And Kailey, we saw a dollar move. It could go even higher, but certainly it's repriced a lot of the markets across the world.
Yeah, a stronger dollar on that hawkish surprise, Francine. We now have a dot plot reflecting 2 possible rate hikes in 2023 and talking about tapering. Plus, Jerome Powell said there is a risk inflation goes higher than maybe they think. So that is rippling across markets and across asset classes throughout the world. In the Asian session, it was mostly risk off. You did have Chinese and Hong Kong equities higher, but broadly the Asia Pacific MSCI index was down, and the Nikkei actually underperformed, down the better part of 1 percentage point. You saw it reflected in Asian currencies as well, most of which are weaker against the U.S. dollar. The loss is really being led by the Korean won, which is weaker against the dollar by 1.2%. And in the bond market, we saw Australian and New Zealand bond yields surging. In Australia, the 10-year benchmark up about 10 basis points, although stronger jobs data did have something to do with that as well. As for what the picture looks like here in the U.S., of course, we saw stocks and bonds selling off after that hawkish Fed decision yesterday, and we are seeing those losses continuing, at least in the equity market this morning. S&P 500 futures down about 18 points. In the bond market, we saw an 8 basis point move higher yesterday. We are coming in just a touch today, but still we're right around 1.57% or so, which is the highest that yield has been in about 2 weeks. It is a stronger dollar story again, as Francine said. Actually, the 5th day in a row, the Bloomberg dollar spot index is higher, now at the highest since mid-April, and that is weighing a touch on the commodity complex. Of course, a stronger dollar not necessarily good for some of those commodities, and crude oil is down. WTI is now just around $72 a barrel. Matt, what's the picture like in Berlin?
Well, we're watching the Fed moves ripple through assets over here as well. Obviously, Kailey, you can see that in the markets. Take a look at this map. We're down pretty much across the board. You can see Spain there lit up green, but everything else is red. And the Stock 600, the broader benchmark European index, is down as well. If you take a look at where the Fed moves are hitting the hardest, you can see that we have Bund yields rising, just like 10-year yields. In fact, yields across the complex are up, and you have the euro there losing ground against the dollar. Very interesting. The Fed's move yesterday sparked a few changes in bullish euro calls at big reputable analysts like Deutsche Bank, like Goldman Sachs, Goldman Sachs previously saw the euro gaining against the dollar. It's now turned that view around since we saw and heard the Fed decision. And then Santander, I have it here right now up 3%, but Banco Bilbao Vizcaya is also a big gainer today. That's the reason you see the gains in the IBEX. So the IBEX is outperforming the rest of the European indexes because Mrs. Botin said that the Spanish economy is going to do even better, in her opinion, than the Spanish central bank has forecast. And the global economy, the global economic growth is, I think, off the hook or off the charts. I can't remember her exact phrase, but definitely going to be very strong, maybe even double digits over the next few quarters. So we are seeing some changes there. We also have some breaking news, Francine, on Huarong. What's the story there?
Yeah, So first of all, Matt, this is probably one of the biggest stories to come out of China over the last couple of months. So now it was suspended for 50 days, and now it's falling as soon as it started reopening. So it's reopening on the MSCI stock index. Remember, China Huarong Asset Management has been basically also ramping up efforts to sell some of their local units. So this has rippled through effects in the Chinese, of course, investment community, and we're trying to figure out exactly what the conglomerate will become. But it is, I guess, a step forward that it has now reopened, but Huarong dropping, but at least it's no longer suspended after 50 days, Matt.
Yeah, very interesting story. We were all following that so closely to see what President Xi would do. He wants to stamp out moral hazard to some effect, but that's very difficult when you've got a big bad debt holder like that. We're not always 100% sure they're going to make their payments. So that's why we watch that closely, because there are so many other such companies throughout China.
Yeah, and Matt, of course, the ability to repay really hinges partly on how much money it gets from selling off assets. So that's something that we really need to watch as well. Kailey, I know you've been following this.
Yeah, so there's some rules here at play. Of course, it's been 50 days as of yesterday that since Huarong did not report its 2020 financial results, and per MSCI rules, within 3 days after that 50-day threshold, the stock will be dropped from the indices. So that's what's happened here. Huarong has been dropped from the MSCI stock indices, Francine.
Oh, apologies. That's absolutely right. So it's not dropping because it's reopened. It's still suspended, but actually it's no longer part of the MSCI. Thank you, Kailey, for that. Now, a look at what else is coming up today. Turkey and Ukraine are the latest central banks to release rate decisions at 7 a.m. New York time. Now, we'll get U.S. initial jobless claims at 8:30 a.m. Euro area finance ministers are meeting today. Janet Yellen also testifies before the House Ways and Means Committee about the proposed 2022 federal budget. Now, stocks and futures on the decline this morning after Fed officials sped up their expected pace of policy tightening. Our Laura Cooper, our Bloomberg MLive macro strategist, joins us now. Laura, the dollar has seen a couple of swings. Will it continue, being on the move?
Well, I certainly think that is the case. Just looking at what we saw in real yields yesterday, it was quite a sharp move to the upside. So that does provide more of a catalyst to the dollar. And I think really what the Fed did yesterday was that hawkish surprise laid the foundation for that policy pivot. So if we look, they are potentially flagging upside risk that inflation could be more sustained. We also saw them strike quite an upbeat tone around that labor market recovery. It could be very strong. So I do think there is a degree of recalibration that needs to occur in the rates market, which ultimately should give the dollar further upside.
Well, let's talk about not just the Fed, but also the ECB, because meanwhile in Europe, the chief economist over at that central bank has signaled they may not have enough data by the September meeting to start shifting policy. He spoke exclusively with Bloomberg earlier. Take a listen.
There will be a time when it's no longer premature and unnecessary to talk about it. But right now, the focus, honestly, for me, is we're going into a very interesting summer, and the challenge of preserving favourable financing conditions, we have to keep our eye on that.
So, Laura, I guess the question is, if you have a Fed that's looking at potentially starting to taper or make a decision on tapering by September, and yet an ECB that may not know in September what it's doing, what does that world look like?
Well, I think we are starting to see that play out already this morning in terms of that central bank divergence. We are seeing the euro on the back foot. And really the comments from Philip Lane this morning are quite timely in the sense that his comments were quite soothing, that did cool some of that rate sell-off that we saw when European bond markets opened this morning. And I do think that that divergence is going to be a dominant market theme going forward. It's going to likely be too premature for them to start tapering in September, whereas the Fed is clearly laying out a different policy path. So I would expect that that is going to play out in some of kind of challenging those bullish euro consensus bets.
All right, Laura, thanks very much for that. Laura Cooper there talking to us about what reverberations we're seeing from the Fed decision yesterday, what we're hearing from Philip Lane in the ECB this morning. We have, in terms of the virus, in terms of global travel, breaking news out of Hong Kong, said to approve easing travel quarantine for the vaccinated. So maybe making business between Hong Kong and the rest of the world a little bit easier. In terms of things that our bad news, down arrow stories, as we would say, CureVac continues to plunge here in Germany. A preliminary analysis of a large study found its COVID-19 vaccine shows only 47% efficacy, well below the bar set by other mRNA vaccines. Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of Research for EMEA, joins us for more. So, Sam, this is an mRNA vaccine based on the technology that's so promising out of BioNTech and Moderna, but it just isn't working as well. What's wrong?
Yeah, good morning, Matt. So I think the company wanted people to feel that it's more to do with potentially the variants than their technology. And I don't think that's fair, and I think that's a little bit too much to push that view out without more information and data. There is fundamental differences between the way they designed their vaccine to the other two, and I think that could have had something to do with it. We did point that out just a few weeks ago, trying to second guess what the outcome would be.
What's the latest? I mean, what does that actually mean for other vaccines in general? And what does it mean for getting these vaccines to the developing countries that need it most?
Yeah, so that's the really tough part, Francine, because this is a vaccine that was an mRNA vaccine, so it had the hopes of those kinds of efficacy levels, but was refrigerated as opposed to a -70 or -20 freezer requirement and a lower dose. So the hope was that you could get more of the vaccine easier to different parts of the world, and unfortunately, that's not panned out.
All right, Bloomberg Intelligence's Sam Fazeli, thank you so much. As we can see there, CureVac shares, those ADRs here in the U.S., down something like 38% in pre-market trading here in the U.S. And as for some other stocks that are moving in pre-market trading, CureVac may be lower, but other vaccine makers actually are higher, one of them being Moderna, which is higher by about 1.1% in early hours. You also have Novavax higher as well. It's up about 5%, although it may just be recovering from the losses it saw yesterday because of some supply chain issues. I also want to take a quick check on some of those meme stocks, the Reddit trader favorites. One of them has been Torchlight Energy, though. It has now made a at-the-market offering for $100 million in shares, and as a result, that stock down the better part of 4%. And of course, Arrival, the EV maker, was one of the latest Reddit stocks that was touted yesterday, higher on that yesterday. Today, though, sentiment seems to have very quickly changed. That stock down about 3.4% in early hours, Francine.
Now, we'll talk a lot more about that in the next couple of minutes. We'll also catch up, of course, with Luca Paolini, Pictet Asset Management Chief Strategist, on the Fed, what it means for dollar, and some of his holdings on bonds. Then, a little bit later on the trade deal with Australia, Greg Hands, UK Minister of State for Trade Policy. We'll see how that trade deal between Australia and the UK can benefit UK companies and business. This is Bloomberg.
Liftoff is well into the future. The conditions for liftoff were very far from maximum employment, for example. It's a consideration for the future. So the near-term thing is really, the near-term discussion that will begin is really about the path of asset purchases.
Fed Chair Jerome Powell speaking after moving forward the central bank's, well, he didn't move forward the central bank's rate hike forecast, but the dot plot now shows that more Fed members see rate hikes sooner than they previously did. He says to take that with a big grain of salt, and I think on that we can agree. That's not really what the central bank plans to do. But he did say they are now talking about tapering. I've got a chart here. I'm working on this. It's a work in progress, folks. I'll tell you, for those on radio, what this is. Daniel Curtis, my New York-based producer, and I are looking at this because of some of the notes we have on our next guest. This shows U.S. CPI, and it has been humming along at a low level for the past. This this is a 10-year chart, but all of a sudden is taking off, as we all know. The blue line is U.S. real wages. So these are nominal wages minus CPI. They are not really taking off. We saw a big bump in 2020 because inflation, of course, dropped at the beginning of the pandemic, but they haven't really lifted off when you consider inflation. Joining us to talk more about this is Luca Paolini, Chief Strategist at Pictet Asset Management. Luca, you say the inflation that we're seeing is not transitory. Inflation is real, but we haven't seen the wage growth that is needed to force the Fed's hand. Is that the only thing that's that we need to see to bring about a taper?
Well, I think, when you look at inflation, what I'm saying is that this is not a base effect. There is something more. I don't know if it's transitory or not. And the proof will be on wage inflation, because wage inflation is stickier and has been trending up, as you see in your chart, actually in the past 10 years. But it's still at roughly 3%. So I think if you see an increase in wage inflation, with the unemployment probably falling to the equilibrium employment next year, well, then I think there is a strong case to be made to accelerate, not only to taper, but actually to do pretty quickly. And I think this is kind of what we have seen yesterday from the Fed, is that they start to feel uncomfortable with a GDP running at 10% on an annualized basis, inflation higher, and it's unsustainable to keep the monetary policy unchanged in this environment.
But Luca, what does it mean for the relationship between the markets and actually the Fed? So the market kind of had predicted this and then aligned itself with what the Fed was saying. Is there a break of, I don't know if it's correlation, but will the Fed now be much more aggressive in pricing in stuff, even if, the Fed says otherwise?
Well, when you look, Francine, when you look historically, there is always this trend of investors getting the timing wrong. They always expect the Fed to start hiking earlier and to be very slow in hiking. I think this time it may be slightly different, but for now we see pretty much the same story. So I suspect that the market is getting the terminal rate probably right, but the Fed will start hiking late, but I think will actually accelerate their hiking or their tightening process very, very sharply. Again, talking now or next month doesn't make a big difference. I think the big difference will be when the markets start to price in an accelerated pace of tightening. And we are probably still, I would say, a few months away, if not a little bit longer. So that would be my interpretation.
A Fed that is talking about tightening policy or talking about tapering, looking to hike rates in 2023 suggests a certain level of confidence about the economic recovery. And an economic recovery, in theory, is a pro-cyclical narrative. But you're pulling back on your cyclical exposure here. Why?
Well, because we think that global, especially U.S. growth momentum must peak. We have seen a number of indicators from retail sales, home builder confidence, business survey. They show that the peak has been, we have passed the peak in terms of momentum. The economy is still very strong. The labor market is strong, but we are not, relative to 6 months ago, momentum is weaker and inflation is higher, which is not a good combination for cyclical assets. They trade at incredibly high levels. Everybody is long. So it's a combination of peaking momentum and positioning. It's not the end of the bull market, but I think a rotation into a more defensive place at the current stage makes sense tactically.
Luca, what does that mean for example, the ECB? So we had a great interview with the chief economist of the ECB today saying, look, September may be too soon to actually start discussing shifting away from the ultra loose monetary policy, but does it pressure other parts of the world to be more hawkish?
Well, I think Europe is lagging the US by usually 3 to 6 months. This is no different. I think in Europe, we haven't seen the same fiscal stimulus we have seen in the US. So that's one thing. So I think they're right to be a little bit more cautious. But if the numbers continue to be as strong as they are now for Europe, I think there will be a strong pressure for the ECB to start at least signaling a change, an hawkish turn, like the Fed did towards the end of this year. But we still have time. And they're not going to take any risk definitely in the summer. So I think it's something we can discuss about it probably in September, October, but definitely not before that.
Luca, thank you so much. Can we take a moment, Luca, actually to gloat about how Italy is doing quite well in the Euros and actually playing quite well as well? I don't know if there's like a little Italian dance that we can do.
Saying that. Yeah, football is important. No, I think what is interesting is that we are playing in a very un-Italian way, attacking football, something I've never seen in a long time. I don't know if it's a good or a bad sign. We will see in the next few weeks.
Look, I am sure there's a correlation between Italian bonds and the way we play football, but we'll look into it and dive deeper into it with Luca Paolini, Chief Strategist at Pictet Asset Management, another time. Now, coming up later today, a conversation with the Bank of America Chief Executive, Brian Moynihan. That's at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First word news and prospects for a bipartisan deal on a U.S. infrastructure are improving. 20 senators, including 11 Republicans, have signed onto the framework for a $579 billion package. Now that's the biggest in decades, although it's a lot less than President Biden actually wants. It also includes a plan to index the gasoline tax to inflation, which the White House opposes. Now, police in Hong Kong have arrested the 3 top editors at the pro-democracy Apple Daily newspaper. 2 of the paper's executives also have been arrested. While they're accused of breaches of sweeping national security law, the paper's founder, Jimmy Lai, is already in prison for attending unauthorized protests. And the Securities and Exchange Commission have once again delayed the ruling on a Bitcoin ETF. Regulators said it will seek more public comment on a proposal to list a product on CBOE global markets, while the Bitcoin ETF could catapult the world's largest digital token into the mainstream among institutional investors. Now, coming up, we talk about the UK striking a new trade deal with Australia. We'll be talking to Greg Hans. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Matt, it's all, of course, about the Fed. We look at dollar. It moved yesterday, could move further. And I think the big question is whether it spurs other central banks to be a little bit more hawkish as well.
Yeah, I thought that was actually a really interesting point, Francine. And I noticed in Hillary's chart note this morning that we do have a graphic showing, if you look at all the world's central banks, many more are raising rates now than cutting rates, as opposed to, the opposite was the case at the beginning of the year. So I think you're spot on with that observation. Maybe we see that accelerate throughout the year.
Yeah, so we'll have a look at, whether assets move on the back of it. What are we seeing now in the markets, Kailey?
Well, Francine, we have seen this Fed decision, the hawkish Fed decision, rippling across assets all over the world. And actually, the stock 600 in Europe is going to snap potentially its 9-day record streak. It's hit a record for 9 days in a row as of yesterday. Today, though, that index is down by about 0.4%. And here in the U.S., we saw stocks falling after that Fed decision, and those losses are continuing. Right now, S&P 500 futures are down about 15 points. The 10-year Treasury yield, meanwhile, is about 8 basis points higher right now than it was before 2 p.m. Eastern time yesterday. Right now, it's sitting at 1.56%, which is the highest in around 2 weeks. And then, of course, as you were just discussing, it is a stronger dollar story again for the 5th day. The Bloomberg Dollar Spot Index is now at its highest since mid-April. As for some stocks moving in pre-market trading, I have to start with CureVac, which is the big mover to the downside. Those ADRs down about 40 points. That's after efficacy data out of its COVID-19 vaccine trials showed it worked less than half the time, only 47%. So that really throws the future of that inoculation into question. We are, though, seeing other vaccine makers moving to the upside. Novavax up by about 5%, Moderna by about 1%. And then, of course, have to check on a Reddit stock as well. That is the name of the game in 2021. Arrival Group was in favor yesterday. The stock rose. Today, though, it is retracing that a bit, down about 3.2% in early hours. Francine.
Kailey, thank you. Now, the UK and Australia have struck a free trade agreement as Britain seeks to expand its post-Brexit economic ties around the world. Now, Australia Trade Minister Dan Tehan spoke with Bloomberg earlier this week.
the UK will potentially get access to the CPTPP. This paves the way for that accession. So for British farmers and other British exporters, potentially opens up huge markets for them as well as the Australian market. So a deal of real substance.
Well, joining us now is Greg Hands, UK Minister of State for Trade Policy. Mr. Hands, thank you so much for joining us right here on Bloomberg. Now, there has been criticism of the deal just because some of the British farmers may not be protected enough. With this deal, basically, the deal gives generous, immediate tariff-free quotas for Australian beef and lamb in a sizable amount. What does it mean for British farmers?
Well, it's actually phased in over a 15-year period, access for Australian beef and lamb exports to the UK. So it's a phased-in liberalisation. I think for UK farmers, we already actually have an agri-food trade surplus with Australia, so there's good opportunities there. But particularly looking forward to joining the CPTPP trading area, 11 countries across 4 continents, the ability for UK farmers to sell into some of those fast-growing Asian and American markets. I think looking forward, that is the real opportunity for UK agriculture.
If you look at some of course, the welfare standards in some of the products sold, it's different in Australia than the UK. So, for example, it's legal in Australia to sell hormone-fed beef, not in the UK. Hot branding legal in Australia, not in the UK. Will you keep the same standards for imported goods from Australia, or could that potentially change?
You're absolutely right. Our import standards will remain unchanged. Nothing in a free trade agreement changes our own standards. Those will remain very high. Australia has got different standards to us on its domestic production, but everything that Australia sells to the UK must meet our import standards. Worth pointing out that Australia has actually got higher standards in some areas. They ban foie gras production, they ban the castration of meat chickens. There's areas where Australia could argue they've got higher standards than us. But the most important thing is that any Australian goods coming into the UK must meet our high import standards.
You know, before Brexit, one of the arguments was you'd be able to strike your own trade deals. How is that going? Is trade going to pick up substantially? Are we going to see that in GDP growth?
Oh, well, look, you're right. What we've done is we've rolled over EU trade agreements with 67 countries. We've done a major trade deal with the EU itself. The Australia deal is our first post-Brexit from scratch new trade agreement. There's no EU-Australia trade agreement. So this is our first deal. It's a very, very good deal for the UK overall, and also leads to us joining the CPTPP, Trans-Pacific 4-continent free trade area. So there's huge things going on. We've just done a deal with the United States on large civil aircraft to an understanding on the Airbus-Boeing dispute. So we are doing a huge amount here to improve Britain's trading position going forward on a number of fronts. It's a very exciting time, I can tell you, at the Department for International Trade.
Is there anything you can do, Minister, about the making the sausage, the back office of these trade deals? They take notoriously long. The EU-Canada deal, I think, took something like 17 years to put together. Can you do these things faster, or is it just the nature of the beast?
No, I think you can do these things faster. They do need a lot of work. Ironically, I'd say that working on Teams and Zoom has made the whole process of trade negotiations actually easier. As long as you can overcome the time difference, doing it this way rather than having to, fly to Australia and be camped out in a hotel room for a couple of weeks. In some ways, it's actually easier to do it this way. So we found working efficiently with our Australian partners. We're working very hard with New Zealand at the moment. We'd like to get back round the table with the US, having come to this understanding today on the Airbus-Boeing dispute. We'd like to get round the table with the US and do a free trade agreement with the US as well. But we found that we can forge ahead on all of these fronts. And the UK, we're in a good position going forward.
Mr. Hands, how does the deal actually affect the Northern Ireland Protocol? So do you need extra checks to make sure that Australian goods don't come into the EU through a backdoor?
Well, Australian goods will be able to access Northern Ireland. There is language on the Northern Ireland Protocol within the UK-Australia Free Trade Agreement. just as important, Northern Irish exporters will be able to take advantage of the Australia Free Trade Agreement to sell into Australia as well. So we think it's a really good opportunity for consumers, businesses in Northern Ireland. I'm looking forward to discussing it further. I've had a couple of meetings with the Northern Irish Executive. I've met with the Ulster Farmers Union to talk about opportunities. So I think it's a good deal for Northern Ireland as well.
What does, a relationship between President Biden and Prime Minister Johnson actually mean for trade between the two countries? Do you see it on a better footing than it would have been with President Trump?
Well, I think President Biden has always talked about rebuilding alliances and building alliances around the world. And there's no better or stronger ally of the United States than the United Kingdom. So today we've seen in this deal on the Airbus-Boeing dispute resolving what has been a 70-year-long trade dispute. The UK actually made the first move in resolving that by not rolling over the retaliatory tariffs that we had at the beginning of January. So working together well there, we'd love to do a free trade agreement with the United States. The US is our largest bilateral trading partner. But also for the US, the UK would become overnight the largest economy with which the United States has got a comprehensive free trade agreement. So it'd be a big thing for both sides. And we'd very much like to get that deal done too.
Thank you so much for your time today. Greg Hansler, the UK Minister of State for Trade Policy. Now, coming up, Kamakshya Trivedi, Goldman Sachs, co-head of FX, interest rates and emerging market strategy research. That's coming up shortly. And this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Francine, Matt, we of course had that hawkish Fed decision yesterday, and we have to talk about its impact on the dollar because we saw a massive move. The Bloomberg Dollar Spot Index actually surging the most in about a year, and that saw the Bloomberg Dollar Spot Index ripping above its 50-day moving average. It is now at the highest level since about mid-April, essentially cutting its losses for the year of 2021 in half. The question now is, how long can it last? Joining us now to hopefully answer that question is Kamakshya Trivedi, co-head of global foreign exchange, interest rates, and emerging market strategy research at Goldman Sachs International. So, Kamakshya, I will pose you that question. How sustainable is this dollar strength?
Look, I think we clearly had a pretty hawkish outcome from the meeting yesterday. I think that what we learned is both that the timetable towards tapering or has kicked off. This was the meeting where very firmly they clarified that they were talking about tapering. But also we learned that the average inflation targeting Fed, the interpretation of that is a pretty strict one in the sense that you have a couple of couple of hikes in the median in 2023, even with inflation not being that far above target. Those are pretty hawkish outcomes, and they are going to support the dollar, especially I would think against other major currencies like the euro, the yen, for a little bit further as we reprice this shift and as we reprice this reaction function from the Fed.
So what does that mean for some of the emerging market currencies? We've seen Asian ones in particular under some pretty immense pressure today.
I think for the next session or two, I think we are going to have to reprice this hawkish outcome, this new interpretation of the reaction function. And I think you can expect to see kind of a broad-based dollar move higher and emerging market currencies come under pressure. When you sort of widen out the horizon, though, as you look a little bit beyond once that initial repricing is done, one of the reasons why emerging market currencies have been trading well is not just because of what's been happening on the dollar side of things or on the Fed side of things. That is important. but also what has been happening on the emerging market side of things. The fact in particular that you're seeing a pretty significant rebuild in the carry and the yield in the asset class as emerging market central banks themselves are acting in a more hawkish manner and responding to this broadening recovery that we are seeing across the world. And a case in point was yesterday, a few hours after the Fed, you had the Central Bank of Brazil, hiking rates by 75 basis points and coming out with an even more hawkish statements and a more hawkish sort of forward guidance about getting back to neutral rates, more quickly. And so I think part of what is sustaining at least some of the emerging market currencies here, and there's a few other things, there's a broadening recovery, there's some, deep undervaluation, but it is also the fact that they are actually hiking rates as well, in what is a reflationary environment. So we shouldn't lose sight of what's going on the EM side, apart from what's going on the Fed side.
Kamakshya, we've been talking about the fact that more central banks now are hiking than cutting, a turnaround from the beginning of the year. On the other hand, the ECB has been pretty clear. At least Villeroy de Gallo came out a couple of days ago and said the ECB is going to prolong their stimulus at least as long as the Fed does. And he also said that the currency is, their main concern, their main job. Usually central bankers aren't this aren't this upfront about watching currencies. Is that one of the reasons that you cut your view on the euro?
I mean, you said it, right? I mean, I think, this meeting from the Fed, in a way, was quite an interesting mirror image from the ECB. I mean, the ECB is probably going to be reducing its pace of PEP purchases over the summer, but they managed to convey that whole thing in an extremely dovish framing. On the other side, for the Fed, there's no imminent action itself, but the framing, the forward outlook through the dot plot, through the press conference was actually, fairly hawkish. So, quite an interesting shift. But I think that's exactly right. That when you look ahead, I think that the places where you could expect to see, some, most clearly dollar strength against that is the places which are going to be much more reticent about tightening policy. The ECB, with its long history of below target inflation, below potential growth, the weight of that history means they're going to be amongst the last. Japan, again, probably amongst the last to tighten. And that's why, I think those are some of the currencies that are likely to see more weakness versus the dollar. That's where I can, really see the dollar move higher against on a more durable basis.
But Kamakshya, overall, and good morning from London, is it possible that actually these increasing inflation or price pressures from the U.S. will be exported to other parts of the world? And what's more vulnerable?
I think there is some of that is certainly possible. And I think it's not just pressures from the U.S. being exported to the rest of the world. I think it is also the fact that you have broad-based commodity pressures, broad-based supply chain tightness that is exporting these inflationary pressures. And you're seeing that pretty much everywhere. I mean, I think you're seeing that in emerging markets. You're seeing that in parts of developed markets. You're seeing that in the UK with the headline inflation beat. So it's not necessarily just something that is moving out from the U.S. However, I think what is likely to be exported from the U.S. is if the Fed is already giving indications of moving in a tightening direction, I think that is going to give a lot of comfort and a lot of impetus to a lot of other central banks across the world, both in the DM and in the EM space, which have been, perhaps moving towards tightening, taking one step, sitting on the fence a little bit. I think a lot of them are going to feel much more confident about moving much more proactively in a tightening direction. I think that impetus or that impulse is certainly one that you will see exported across the world.
Kamakshya, I also want to ask you actually about cryptocurrency. Earlier on, I spoke to Jesse Powell, the chief executive of the digital currency exchange at Kraken, and I asked him where the price of Bitcoin will be.
It's really hard to price things in dollars. We just don't know where the dollar is going to go, really. I'm super bullish on Bitcoin. I think $200,000 a coin by the end of the year is still within reach. I've said one Bitcoin, one Lambo by the end of the year. It may be a Lambo with a fewer options or a smaller engine at this point, but I think we're still looking at very lofty price targets here, and I think we'll see a new all-time high before the end of the year.
Kamakshya, how much more do you have to look at some of the crypto coins?
Look, it's not something that we've been looking, at least I've been looking very, very closely at. I mean, I think what is, though becoming, you hear more and more of this, that I think, policymakers and regulators are taking a closer look at this, with the central bank digital currencies. And you had, both actions from China, but also statements from, for example, the governor of the Bank of England the other day about, the regulatory issues that come in this space. So I think there are, clearly, there's clearly risks on the upside, but there are also risks on the other side. So I think it's definitely one that we are going to be having to talk a lot more about in sessions like this to come.
Kamakshya, thanks so much. Kamakshya Trivedi there, co-head of Global Foreign Exchange, Interest Rate and Emerging Market Strategy Research at Goldman Sachs International. Now, coming up, we'll speak to the Norges Bank Governor, Øystein Olsen, following the latest rate decision. He was talking about changing some of what they do in terms of monetary policy. Maybe from September, it'll be interesting to get the read across from what we heard from the Fed. That interview, 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance, who also oversaw our coverage of the Fed yesterday, joins us after a very long day when he was looking at dollar and all the moves, Tom. I'm excited to hear your thoughts today.
Really, really an interesting day. And as Michael McKee said, Francine, it was a surprise. And as you know, it's always telegraphed and boring. It was not yesterday. And the
Never
markets moved. Brian Moynihan will be here to comment on it. David Weston and Brian Moynihan in conversation. You got to start with the Fed with Moynihan and say, how upset are you? Alan Ruskin with us as well. Mayor Adams maybe with us. Eric Adams doing well in the New York mayoral contest. David Rosenberg, I should mention as well, in the governor of the Norwegian Central Bank, which is really looking forward to a great lineup of guests. How about the real yield? Let's look at it. The new phrase is not transitory. The new phrase is substantial further
Grain
progress.
of salt. I thought that was a new phrase, Tom.
Substantial. Yeah, grain of salt, I think, should have been higher up, frankly, in the reporting. But, Francine, it's substantial. The real yield, big negative, has to make substantial further progress to get back to substantial further progress.
Yeah, I love that. That was my catchphrase, Tom, when we anchored together.
Yes.
Always with a grain of salt. Like a tequila.
Substantial further progress. I have no idea what that means.
All right, I do. Central banks do, Tom. I'm looking forward to the show. Tom Keene, their co-anchor of Bloomberg Surveillance Simulcast. Now, let's take a look at what else we're watching today. Kaylee, you're all over sports.
I'm watching golf, Francine. The U.S. Open begins today at Torrey Pines. Of course, Bryson DeChambeau is the reigning champion, but it's actually the Spaniard, Jon Rahm, who is favored to win. It could be his first major win because, remember, he was pulled out of the Memorial Tournament after testing positive for COVID-19. Now, the first tee time today, 9:45 a.m. Eastern. It will run through Sunday, which is Father's Day here in the U.S. And Matt Miller, my wish for you is that you get to spend your first Father's Day watching some golf over there in Germany.
Yeah, well, I will definitely be doing that for sure. I've got the app on my Apple TV box, and I love Bryson's pink shirt with the green blazer there. Very nice. Masters blazer, always a classic. I'm going to be watching something that Francine really pointed out in this hour to me, and then I remembered seeing this chart from London producer Pooja Kandia about central banks. This is global central banks. There have been 84 central bank actions in 2021. At the beginning of the year, there were more cuts than hikes, and that quickly turned around in February. In April, only hikes. So it's going to be interesting to see what the recent Fed meeting spurs in terms of substantial further action. Substantial further progress? Substantial further progress.
There you go. I love that. Actually, it just made me think, Kaylee, that you have multiple Mother's Day if you're French or Italian or American, but I think Father's Day is universal, certainly amongst European and the U.S. and even the U.K. What I'm watching for
we
is
had
your
Father's
area
Day here
finance
already.
Ministers. Oh, have you? Okay, apart from Germany, but Italy, France, and the UK are the same day. I'm looking at the EU forging closer ties with the US. What does that mean for this continent? This is Bloomberg.